Well, okay, the Mag 7. We couldn't talk enough about the Mag 7 about last year, the year before, but parts of the Mag 7 have been a real driver of gains for this year. That would be NVIDIA, Alphabet, and Apple. Year to date, they have looked very strong. NVIDIA up nearly 12%. Apple has gained 9.25%, Alphabet up 11.6%. But some of the Mag 7 names have really started to lose their luster. Meta, Tesla, and Microsoft. Amazon also is just up over 1%. Today's Countdown closer says, time to bring out the pinking shears and trim the positions in the Mag 7 you might have to make room for the new beneficiaries of artificial intelligence. Joining me now, Mackenzie Investments Chief Investment Officer of Equities, Lesley Marks. She manages $180 billion. Lesley, so time to kind of turn your back on some of the Mag 7. What do you see here that makes you feel that way?
Well, hi, Liz, and thank you for having me into the close here today and for that setup. When you look at what is driving the market and the factor that seems to be the most dominant in this market, it's really the momentum factor. And what you've shown by showing the stock price performance is that momentum is not as pervasive across the Mag 7 as it has been for the last few years. The primary driver of that is the amount of capital or capital expenditures that these companies have to spend right now, and that's impacting their free cash flow, which is why you're starting to see equity issuance, increased debt issuance, or capital raising. And this is a real change from the stock buybacks that these companies have benefited from, so shrinking their share count. Now we're starting to see, and Alphabet being the first one, increasing the share count. So there are a lot of great stories in the market. There are a lot of great places to invest right now. And I just think that on a relative basis, a lot of the Mag 7 names are going to have trouble outperforming the markets at this point in time. So a good time to take a little bit of profits and start deploying that into other areas of the market.
Okay, so you like the basic materials, the cyclical sectors, as you said, the transports, which are actually doing pretty decently. Some just consumer discretionary names. Which part? Because anytime there's a questionable piece of data, and we're getting some important data, the economic calendar is stuffed this week, and I think it's important to point out that we are expecting the May personal consumption expenditure index. That is inflation that the Fed likes to look at the most, the inflation piece. We are also getting GDP, the third print of first quarter GDP. If there's anything bad about it, suddenly consumer discretionary goes out the window.
Well, yes, that's right. And that's why I'm being selective when it comes to consumer discretionary. We haven't seen the consumer be that strong here. Obviously, fuel prices take a big chunk out of the consumer's disposable income. As many guests, I'm sure, have talked about the K-shaped economy. Many consumers are very impacted by inflation in general in a negative way. But I think when you look at areas like the travel industry as a key discretionary industry, I think the travel industry actually could be quite attractive here in the context of a resolution or a de-escalation in the Middle East with Iran and fuel prices coming down. So remember, I mentioned this idea of momentum being such an important factor. I think you could start to see momentum come into the areas that were very negatively impacted by higher fuel prices, like the airlines, like hotels.